Okay. Oh, a recording error has occurred. Please try again. Do you see that, Michael? Okay, it says an error for recording again. Okay.
Go ahead.
Hi, everyone. It's Dianna Thorne here, and welcome to the very first business series, start of the year planning. I look forward to walking you through a whole bunch of things that will get you on the right foot for this year. My name is Dianna Thorne, and I am president of Targeted Accounting. I run a day-to-day bookkeeping and accounting consulting company that has staff and clients right across Canada. And I want to let you know you can ask some questions. There's a chat box that you can put questions in, and at the end, we will try our best to answer them. So this is how to start the year off right. And the agenda, hopefully we'll keep to it, is we're going to spend about 15 minutes introduction and sponsor message. Well, I think I already did that. That's less than 15 minutes. Then we're going to go into keeping your books up to date, and then on to hiring and staying in the government's good books. Then we'll have time for questions. So one thing is you really want to keep your books up to date, and one of the easy ways, because I know all you business owners are really, really busy. I am, you are, and there doesn't seem to be enough time in the day. So one of the things is you want to try and automate as many things. And my new word this year is automatize, and it's actually a word. So one of the ways we can do that is use QuickBooks Online with all of its features. Okay, I had something in the middle of my screen there. All the features and apps. So QBO acts as the core program. It doesn't do absolutely everything you might want it to do, but no fear. There are apps that will work with QuickBooks Online. And with the Canadian version, there is 200-300 different apps that you can use. So a combination of the QuickBooks as your core and apps, you will find that you can get a lot of your work done and automate it and just be in a reviewing state. So it takes a lot less time to keep everything up to date. So I wanted to talk a little bit about the difference between QuickBooks Desktop version and QuickBooks Online. So QuickBooks Desktop version, it's still an active version, and Intuit is still doing updates. This year's 2018 version had quite a few nice new little features. So it's never going anywhere. It's always going to be there. But then we have the option of that one or the QuickBooks Online version. So the desktop version does have some apps. There are many, many apps out there. I have lots of clients that are using apps that talk with QuickBooks Desktop. Some of the apps that you'll find that are available for QuickBooks Online also will talk to desktop. So you can sometimes look and see if you're still on desktop, if an app out there talks to your version as well. With that, what I've noticed is you get some automation, and some has some automatic syncing, and some you have to force the information over. So, which can be a good thing. Sometimes you want to get it all right in the other app, and then you want to say, okay, now I'm ready to push that over to the desktop. Other apps will sync back and forth as you're changing things in both the third-party app and in the QuickBooks Desktop, which is kind of nice. They just, every now and then, they sync back and forth. QuickBooks Desktop has bank feeds, and we're going to talk about that. It has it in QuickBooks Online as well. But the bank feeds in the desktop are really different. And I found it was a great idea, but I found a few bumps along the way in using it. One of the items was that if you traveled around and went to many different stores that were the same retailers, such as a Staples store or a Starbucks store, they always would come in with a feed that would also give you a store number. Well, QuickBooks would read the first part, but it would also read the second part being the store number. So every time it looked at it, thought it was a new vendor. So that created a bit of problems, and I found it was difficult to use. And you also had to do like a manual upload for it. So a bit problematic if you couldn't get access to bank files, etc. So a little bit different way of doing bank feeds. It works for some people. I did have some clients, we had it worked a little bit on credit cards versus on the actual bank accounts themselves. But there was some bumps along the road. So great idea, but not quite 100% there. Lots of manual entry that you have to do in desktop, especially if it's not feeding in automatically from some apps. But still doable, very friendly to use. And you need to do a backup, and you could easily do a backup. You could set, and still can set reminders so that you have an automatic reminder to say, hey, it's time to back up your desktop, and you can back it up on the same drive, but of course you should also back it up on another off-site place so that in case something ever happens to the computer, you have backup. But it was a bit of a manual. You had to push the button and say, yes, please do it, and or move it to also an off-site place. So now let's look at QuickBooks Online version. It has as many or even more apps than the desktop has out there. And they even have given you, when you log into it, they've given you an app center right in where you log in. So you have easy access to look at all the apps, which is different. And that's not even all the apps. That's all the apps that Intuit has gone through with the app developer and verified that it works with their product, etc. There is still a ton of apps that haven't got through that whole process that if you Googled, you would find them. But a good, nice location to look for them. And most of them automatically sync. There's very few that you have to say, please sync the information from my app over. Most are automatic. They just stream in as they happen. Might be a few hours difference, but they will stream in. It also has bank feeds, and I find that it works a lot better. They seem to fix the problem of noting that you've been to 16 different Starbucks. It can just read that Starbucks word, and you set it up and say, yes, that's one vendor and that's it. With that, there are something called bank rules. So after you get the feed in, the feed gives you the date of the transaction. Depending how it comes in, if it's in as a debit, it'll note the vendor, that it's Starbucks, and it'll note the amount. But with the bank rule, you can say, hey, when that bank feed comes in, I want you to recognize it, and I always want that to go to meals and entertainment. And you're going to know what the sales tax, GST, HST, is on it. And you have an option of saying, get that information in and let me do the last review, or automatically do it because I know every single time it's going there. So that you don't need to review it every single time it comes through. You just want it to automatically post and be there for when you're reviewing your reports. That is really handy. And in addition to the desktop version. There's a minimal manual entry if you use a lot of the apps, and we'll get into that a little bit later on some of the apps and what they can do and how fabulous they are. But there's a lot of apps out there that are reading things for you so that you can minimize the amount of manual data entry you have to do, which means less time for you or the staff that you're having do your books. There's no need for backup. It's in the cloud. It's being backed up by Intuit through their processes, and I just added this in because this only came to me since December. I've become aware that there's at least 3 apps that I'm now aware of that will actually, you can pay a subscription fee for and attach it to your QuickBooks file. And those will actually back up your QuickBooks file. So you can actually have a backup somewhere else. So if you're still you're not so sure on what happens, there's something could happen, or I could mess up my books, or lots of things, you want to have that reassurance there's another version somewhere that you can just reinstate and continue on. Well, the answer is now there is. There's at least 3 companies out there doing it. You just have to look at what all are they backing up. If you're okay with that, they all are subscription, usually by month. And some actually not only back up on their area, but they also let you have a backup, and you can back it up in, say, Google Drive or Dropbox. So I found that to be really, really handy. So we're investigating that now and have signed up a few clients on that. So to help with that nervousness. So that brings me into what is this app world, and one of the buzzwords, there's a couple. One is an accounting ecosystem. So what you need to realize is that QuickBooks is the core, and that you need some other things around it to do some of the things you'd like it to do. Some used to be in the desktop version, like still are in the desktop version, but they're not in the core QBO version. And you're thinking to yourself, well, I don't want to move from desktop to QBO because it doesn't have this feature. But there's probably an app that does have this feature. So then it's to weigh, you now are paying for two apps, right? Instead of just one upgrade every year. But then you have to weigh, okay, but what's the time saving for me? That there's no manual entry, there's no double entry. It's all flowing through. That's what you have to weigh, and that can be quite a lot of savings. The other buzzword besides ecosystem is app stack. So people are saying, what's your app stack? What's the stack of applications that you are using with your core system? So that's a new one that was just presented to me, so I wanted to share it in case you hear either of those two. So here's some areas that tend to be ones you see most often in an ecosystem. You'll see a CRM, or client relationship management system, where you are posting all your prospects, leads, etc. And eventually when hopefully they turn into a sale, you'd like that information to automatically be set up over in QuickBooks. And so you'd like the two to talk. And sometimes they'll even talk back and forth, and sales invoices can be done in one and moved over to the other, and vice versa. So what you do in QuickBooks Online shows up, so the next time you're talking to the client, you can see outstanding and past sales with that client. So it helps you with your sales calls. Time and billing applications to gather time to be able to charge to your clients, or to be able to run payroll with your staff. Some of them have gather time and then allow you to do the sales invoicing right in the system. And again, talk to QuickBooks Online. Then the next step, of course, would be payroll. So the time is in there for your staff or yourself, and now you need to run payroll. So again, it's all just fluid and talks through the applications. Maybe you want to be able to receive electronic payments from your customers, and maybe you want to make electronic payments. So checks are kind of going by the wayside. I have a client who told me, must have been 4 years ago, he's German, and he says, we haven't dealt with checks in like a decade. So you're really archaic here. So let's stop being archaic. Let's move to the electronic side. And it's also, fraud, a bit better on fraud proofing yourself, because there's a lot of mail fraud with checks. So using electronic payments can save time and trips to the post office, mailbox, etc. And a lot of the apps actually do quite a few things. You can do multi-currency transactions, etc. They've advanced quite a lot. And then there's the e-commerce and the point of sale app. So if you have a website and you're selling through that, or a retail site, you're going to want some e-commerce and POS, and you'd really like for them to talk to QuickBooks and not have to manually move information over. So those are just a few of the areas. I mean, there's inventory. There's, you name it, you think it. There's an app area for it, but those are some of the most common ones. We're going to jump now off of QBO for a bit. We're going to go back in a bit at the end and talk a little bit more about it. I want to bring you back around to it. But some other things that I was asked to talk about that tend to be a little bit problematic for business owners are, what do I do if I want to hire someone? And I'm first going to talk about, you have two options. You can hire as an employee, or you can hire as a subcontract. And you need to understand the rules and the differences between those two. And actually, CRA has a really lovely guide. If you go to the CRA site and you search in their search for subcontractor versus employee guide, it'll come up. And there's rules in there. You can kind of run through a little checklist and see if in your mind the person ends up being really an employee or a subcontract. And note that CRA has certain rules around that. WSIB or WCB, whichever province you're in, your workplace insurance safety boards, they have different rules in determining if a person is included or not when they deem someone to be an employee versus a subcontract. And now the provinces have got in on this topic and saying we're clamping down on this definition and what it means. And one of the main issues is, is that person dependent on you? So if you stopped giving them work, could they actually still survive in their personal life, have enough income without you? So when you use people only for a few hours here or there, the answer obviously is yes. But if you're using someone for, more than 50% of a week, a normal work week, that's where it's starting to get dicey. And you may find people are, not people, but agencies are coming to you and saying, we want to check and make sure your subcontracts really are subcontracts and not employees. That's all I'm going to say on the employee versus subcontract. Now we're going to continue talking just about if you hire the person as an employee. So some of the things that I know, being a business owner myself, you're in a hurry, you need the people, you need them to start 5 minutes ago, and you don't do all of these different steps, and you skip some things, and later it can come back to haunt you big time. I've seen it many, many times at my clients' offices. So I wanted to just run through quickly what some of the things you got to make sure you are paying attention to. So we're going to talk about interviewing, hiring, paying, and then what eventually will happen: fire, retire, maybe it's layoff, maybe it's because you've wrapped up your company, but there's an end to that relationship. So interviewing, make sure before the person comes, you've actually looked up some interview questions. And easy, you Google it. I've done it. You can ask the questions you would normally. I mean, you're going to ask them about things you see on their resume. You're going to ask them, maybe for examples of experience they have that's going to relate to the job that you are looking to fill. But you want to sometimes kind of put them on the spot and make them think. And it's interesting what you get back. So some questions that people are now starting to ask are behavioral questions. And that's where the second point comes in with company values. How do they react in different situations? Give them some kind of scenarios and say, if this is something that could happen in this job, if it's something that happens to you, how would you deal with it? Or can you tell me, a better question is, can you tell me an experience in your work life where you've run into this and how did you handle it? Because how you did handle it versus they're trying to give you the perfect answer, they can be two different answers, right? So make them think. Then if you've got company values, make sure you run through those and say, hey, this is our company value. Could you tell me an example of where you've done this type of exact thing in your past work history? And I tell you, sometimes they can't think of something. And if they can't think of something, then those values are not really firstmost in their mind. And they maybe don't have the same values as you and your company do. So really important to go through those. And even if you don't have values, then just think about quickly, okay, what do you value in an employee? Timeliness, collaboration, that they collaborate with the team and the management. Just think of a few things you want in the perfect employee and then create some questions around it. Find out why they want this job. What excites them about this job? Ask them what they know about your company. Like, did they take 2 minutes and Google your company and find your website? There's hardly a company out there without a website, so they should have done that. They should have done their homework before coming. They should have seen what you have on LinkedIn, your profile and or your company profile, if you have a Facebook page, and if you have a website, and what your company does. And they should know some of that cold before they come into the interview. And ask them, what's your ideal job? What are your future aspirations? I asked that one time of somebody I was interviewing. They said, well, in 2 years, I'd like to start running my own bed and breakfast. And I was like, okay, I don't want to hire this person. In 2 years, they're gone. I'm going to have invested all this time in them, and in 2 years, they're probably gone. So it was really interesting to see what they said. You'll get the funniest, craziest answers to some of those questions, and they're not even expecting it. I like asking them what they think is a strength, and of course, they're going to say something fantastic. But then here's the curveball. Ask them, what is your greatest weakness? And they need to answer it. Don't let them squirm out of it. They need to answer it. And you know what? Then they're showing some honesty, and then they're going to probably comment on, and this is how I think I can, deal with that weakness. And if they don't come out with that, ask them, well, how do you think you can, bridge that gap, get yourself up to where you'd like to be? So some interesting conversations. So interviewing needs to take some time. And then as well, what I didn't put on here is invest the time to explain to that employee what the atmosphere and what's going on in your company is all about. Because, an hour and a half interview is well worth it if you get the right person that's the right fit for you and the rest of your team. So put some effort into that. The next thing is, okay, so you've decided this is the best person for this position. Now what? You need some sign-offs. Very, very important. One kind of thing that people are doing now, and I do suggest, is that after, even if you offer them kind of a job there in the meeting that you have, the interview you have with them, follow it up with an email and lay out in point form, here is your employment offer, and have them accept that. Once they've accepted it, put it into an actual contract. You need to get a contract. There are multiple ways to get a contract. There are HR companies out there. There are HR lawyers. You can even Google and find some templates. Make sure you're, though, saying for whatever province, because you want to make sure it's Canadian. You want to make sure it's province specific because there's different rules on termination, etc. But get a contract together. And here is the thing most people don't know about. They say, your contract will be here for when you come to sign in, because we're all used to, ink signing. But you don't need to have that ink sign right away. You can have an electronic signature, or you can have them ink sign and scan it and send it back. Very, very important. Send it out ahead of time. Let them have time to read it. Ask any questions. Have them sign it off, and it must be received either in mail, email, what have you, in your hand prior to the day they start. That is extremely important if you end up with a disgruntled employee later and you end up in labor relation issues. Really important, because once they've hit your door, it's assumed they're hired and an employee even without signing a contract. So get that done ahead of time, and that gets missed, I would say, the most. So that's why I'm putting a lot of emphasis on it. Payroll information that you need to get. You need to make sure one, if you are supposed to be registered for WSIB or WCB, depending on your province. A lot of companies think that's only for manufacturing companies. Not so. But there are some companies that are exempt, odd list of companies that are exempt, but there's a lot of companies that are not exempt. So you need to know, and you can look it up on the agency's website. You can usually put in, do a search for your industry and see if you're required to. Some it's optional, some it's not. Most it's not, so know ahead of time. And here's something most people don't know. You are supposed to, I know for sure in Ontario this is true, you are supposed to know and have your company registered within 10 days of offering employment, not when they show up. It's when you've offered the employment. So make sure you're registered so you don't end up with a penalty. Also, make sure that you know if you need to have more than one code for WSIB. You might do 2, 3 different types of things, and you need to be registered under different multiple codes. On the specific on the employee side, when they arrive, you need to get TD1 forms. And there is a federal form, and then there's also a provincial form. Make sure you get both. Make sure your employee fills them out for you and you have them on file. Good thing to have them done annually, not required, but you sometimes don't know that things have changed in their home life, and it's a good idea to send it out and say to the staff, if anything's changed and you'd like to update your TD1, please do so at the beginning of every year. Keep those on file. Oh, file? We need an employee file. What should be in that file? How many times have I gone to clients' offices and they go, I don't have an employee file for all my employees? Well, the Labor Acts say you're supposed to. So what should you put in those? Again, guess what? Google is my favorite friend and knows it all. So I have sometimes just Googled what should be an employee file. Easy thing to do, and you'll get a list. And a lot of it might not apply to you, but there'll be a core amount that does. So what should you have? Their resume, the job description of what their job is. You should have the contract signed, the TD1 forms. Every time you do like an increase or change their compensation, that email or whatever backup should be in their file. Anything that you have to do for probation issues or any meetings you have, and you make notes from the meeting, any of those things that have to do with the employee should be in there. Absolutely. Okay. Oh, one more thing before I go off that, I want to talk about payroll, and under that payroll information, I forgot a couple items. Make sure you know what all is a taxable benefit that you're offering in the compensation. So make sure, like bonuses, guess what? They have to be T4'd. They have to be part of the compensation. Of course, they're taxable, EI and CPP on them. Maybe you offer some other benefits to them. Maybe they get a cell phone because they're a salesperson. Maybe they get some a company car or truck or vehicle of some sort. There are benefits associated with that. Best way to know if there's anything you're doing in your compensation that is a benefit, and you just won't even know sometimes because you'll just think, oh yeah, they need that because they need it to do their job and it's a company expense, but it's also a taxable benefit sometimes. So look up taxable benefits guide, CRA search, and there's another whole guide on that, and it lets you know how to set up the payroll. Not everything has EI and CPP taken off. Sometimes it's only income tax, so you got to know that. There's a beautiful chart in there. And you know what? Giving little perks like, oh, you did a great job, and you give a gift card, like you give them a Starbucks or a Tim Hortons gift card. Guess what? Taxable benefit. Like there's so many things you might do and you're not thinking about it. Taxable benefits. There's only a very few things that aren't. Like if you give them a T-shirt with your logo on it, that's obviously not a taxable benefit, but so many other things are, so make sure you know. Another thing I have found that a lot of companies don't do if it's salaried employees, they don't know when someone has actually taken a sick or personal day or time and vacation time. Guess what? The Labor Acts and the provinces say that on the pay stub, those should be noted. That's your proof that you actually gave them vacation. I had a client once, a construction client. He was paying a foreman salary, so he wasn't noting the vacation on it. They got their 2 weeks. It was just included, 52 weeks a year. You pay them. You think all is fine. Well, the disgruntled employee took him to labor board, and he said we hadn't paid him vacation pay. Well, we had paid him vacation pay, but it wasn't on any pay stub we had issued. And they showed us in the act, you're required to do it. The only thing that saved that client was that they submitted timesheets, and in the gentleman's own handwriting, he wrote he was on vacation those 2 weeks. So we were saved, but we were warned, get it on your pay stub. So it was a good learning experience. Make sure it's on there. The other thing is you have to remember to give them a pay stub. I've been to a lot of companies where they don't give them a pay stub. Make sure that they get that pay stub. It shows all their deductions, their gross, and their net. Okay, now we can go to the next slide. Various deadlines we want to make sure that everybody's aware of. You must file T4s. They can be filed online with CRA, which is fantastic. If you're using desktop version, you can do them direct. Not sure if QuickBooks is going to have it direct this year or not. I haven't heard they do. I know it's supposed to be coming. I'm just not sure that they have it this year or not. But you must file them with CRA by February 28th. If that is a weekend, then it's the first business day after that. If you have somebody you lay off or you fire, you retire, they quit, what have you, they go on mat leave, whenever they stop working for you for a period of time, which by the way is 7 days, if they don't work for you for 7 days, you're supposed to issue a record of employment. You can do that online, but guess what? You have 5 days from the last day they worked. It's not 5 business days, it's 5 days. So half the time a weekend gets in there. So a lot of time you only have 3 days. Now, you go, well, I haven't run payroll yet. They don't care. You need to run their payroll, that at least employees' payroll, and then you need to be able to determine the information for the record of employment and get it submitted. The nice thing is all these things are online these days. Record of employment, no exception, and they have a little wizard. So if you're really not sure, it kind of goes step by step and has little info boxes to explain what's really needed for that box. So it's really, really quite handy, I've found. And then we've already talked about WSIB or WCB. And if you're in Ontario, there's also Employer Health Tax or EHT. So you only have to worry about EHT if your entire compensation for your company, including the owner, is over $450,000 a year. If it's over that, you will have to pay an added tax that's to the Ontario government. It can be annual or it can end up being monthly. It's annual if you're between 450 and 600 compensation, and it's monthly if you're going to be over 600. So once you hit the first stepping stone, which is the 450, once you hit that, you have to start paying every month, and then you have to do an annual remittance as well to reconcile things. Okay. Oh, one more thing before we forget. I didn't put a slide in on. So on the fire and retire type thing, what about making sure you've paid out all the vacation pay? It's one of those things that gets forgotten if they've accrued some and they haven't taken it yet. If you're using a payroll program, it should be set up to accrue if you're not paying out every single pay period. So at their very last pay, make sure you've paid that out. And do an exit interview. Why are they leaving? I mean, if you know they've already told you they found another job, whatever, fine. But with that, okay, but why weren't they happy staying with you? Had they outgrown you, or was there something you weren't doing? It's better to find that out so that you can improve upon your culture and your relationship with your employees, because it's so costly, time-consuming and costly to hire and train. So find out, what did they like about what you were doing? What could you have done better? That type of thing. Make sure you do that exit interview. You can learn a lot from it. So now we're going to go into another whole area of keeping in the government's good books. I cannot emphasize enough, do not red flag yourself. I mean, sometimes your number just comes up with CRA and they just pick you and they want to know something. And there's nothing you've done. It's just you randomly got picked from the pool of companies. But there's a lot of other things that do red flag you. So what are those? And make sure you're not doing them. So one is to know and keep to the deadlines. And listen, start it off at the beginning. I know you're busy. I'm busy. I don't work 9 to 5. You don't work 9 to 5 probably. The issue is if you cannot keep up with your bookkeeping, make sure you find somebody who can assist you. If you can do most, but you can't kind of finish it off, find someone to do it. You've got to keep to those deadlines because they're costly if you miss them. If you don't file, you will get a penalty for not filing. Then you'll get interest charges for whatever you owe on that filing. Neither of those are deductible on your tax return, whether you're incorporated or unincorporated. They're not deductible. Even if you pay them out of your business bank account, you show them on your profit and loss, your accountant will add them back when they go to do the tax return. Not deductible because you've been penalized. So what are some of the ones you want to keep ahead of? GST, HST. You can be registered for monthly, quarterly, or annual. Now, when you fill out that form, usually a lot of us, we don't need to be filing except for annual. But that can be problematic. One, you keep putting off your bookkeeping. That tends to happen until you actually have to do it, and it might end up in a really busy time for you, and you don't make the deadline. The next thing is that even with annual, once you filed one, now CRA knows kind of how much you're doing, and if it's over $3,000 owed for that annual return, they'll come back to you and say, you need to file quarterly, and you need to estimate what next year's going to look like, and then pay 1/4 of that. They actually, after the fact, after that next year, will go back and look, and if you made more than you estimated and didn't pay enough in those installments, they'll penalize you for it. So in my books, I try and not have any of my clients have annuals. I try and avoid them like a plague. They're just problematic in so many ways. Not getting the books done, and if you didn't estimate and pay the right quarterly installments. And you're having to do something quarterly anyway. Why not just make sure your books are up to date? So my recommendation is have your GST, HST remittance periods quarterly. That forces you every quarter to get them up to date, and it's only 3 months. It's not this ginormous project. You have a smaller project to deal with, much more manageable. And then you can, again, file those online and make a payment online. Now, let's say you were really busy and you weren't really watching how much GST, HST you were collecting. and you don't have enough money. Still, remit on time, get something paid, and get it paid off as soon as possible. The good news is the interest rates are really, really low. You can look them up. Again, if you search on CRA's website, they'll tell you the interest rates they're charging for GST, HST, really low. They're like 1%. But the point is, why pay what you don't have to? You're going to have to do all this work anyway. Don't pay penalties and interest. Next thing is your income taxes. If you're incorporated or unincorporated, there's different deadlines. So let's say you're incorporated. You have 180 days to file a corporate tax return, but you owe any tax you owe, income tax you owe within 90 days. So when should you really make sure your books are done and your accountant has finished your tax return? By 90 days. So that means you need to give your year-end accountant enough time. So I always aim for, I want to be done 45 to 50 days after my year-end. I want to have my year-end done and then send it to my accountant. So they have enough time for tax planning. They can decide bonuses, dividends, and how much you're going to owe for income tax, and you can pay what's owed. Again, same rule is going to apply if you owe more than $3,000. The next year, CRA is going to say you have to pay installments monthly. They don't send you a letter for that one. You need your accountant to tell you. So make sure they tell you if you paid over $3,000, what's my installment calculation. Their program, their tax program just spits that out as a report. It's not extra work for them. It's just a report. You get it, and then you automate and pay those online. Now, unincorporated, different story. So you're unincorporated, your year is absolute January to December. You have to have your income taxes paid like any other personal tax return April 30th. So you get one more month than incorporated. You get to April 30th. Your tax return is not due until June 15th. Now, I think they did that to try and make it the same. It's not quite 6 months. It's just shy of 6 months. But I think it was to make it the same as you have up to 6 months for an incorporated company. But your taxes still due April 30th. So again, have everything done. And your accountant, that's their busiest time because they're not only doing year ends, December year ends, January year ends, and that they're also doing all the personal tax. So don't fool around. Get it done ahead of time so you get into them on the early side of their busy season, not the late side. And the other area we already noted is under employees. So source deductions. Oh, I didn't talk to you about it. Source deductions. So after you do payroll, you owe source deductions to the government. So make sure you meet that deadline. That deadline is, for most of us, based on the size of our payroll, it's the 15th of the month after. So January's payroll, the source deductions are due February 15th to CRA. WSIB or WCB is sometimes quarterly, sometimes monthly that you'll owe, again, depending on the size of your compensation total for your company, and already went over EHT. More things that you need to know. These now are getting off of the government remittance reporting. Now we're going to talk about specifics in how you're noting things in your books. So one of the areas that always gets talked about is meals and entertainment. First thing you need to understand, meals and entertainment are only 50% deductible, not 100%. If you bought office supplies, they're 100%. If you go and have lunch with a client, it's only 50%. So remember that only 50% is deductible. Again, on your credit card or out of your bank, the full amount you record in your books, but when your accountant does your books and your tax return finishes it off, they will add back 50%. Also, on the receipt, you're required by CRA, and you can look this up on their website, you're supposed to put the name of the people that you were with and what it was why you were meeting, because they're a client, or it was a prospect meeting, what have you. You're supposed to note that on there so that if they come and they want to see the receipts, they can see, and they may even, want to see, well, where is it in your calendar, right? They want to see, yes, this looks like it was a company expenditure and not a personal expenditure. Can I right off the bat say, please don't have it say on there, happy birthday or somebody's birthday. I had a client who did that, and CRA was auditing their receipts, and of course, disallowed it. Like, don't be silly. Make sure you've got the right information on there. Also, you going to Tim Hortons or Starbucks on the way every day to your work or before you start work, guess what? Really is not deductible. Because why? You were supposed to say who you were meeting and why you were meeting, and you can't do that. Now, it's fine, one-off. Maybe you bring a whole Tim Hortons carton in for a staff meeting. Well, then you write down it was a staff meeting, right? But so many people do it. I will tell you, go ahead, you can deduct it. But CRA, if they come in, they will want to see, well, who did you meet and why? And when they see every single day, and I've got clients who do it, and they're going to start denying everything, and then they're going to start looking at all your monthly payment. They'll be dissecting that account, and you do not want that. So be conservative. Keep it to real expenditures for the business. The other thing that I want to talk about is entering things in bulk. So 2 areas that can happen. One is you have a credit card, and you look at that credit card and you go, whoa, there are 2 pages of credit card items on here, and I don't really want to sit and post every line or pay a bookkeeper to do that. So I'm just going to code them, meals, office, advertising, what have you. I'm just going to put a little code. I'm going to add them all up really quickly. And I'm just going to post it as one bill or one journal entry. Well, here's the problem to that. One, you don't really know who and what you've paid money for, and maybe later you're going to want to know that. So management reporting. But here's the bigger one. You may say, I'll never want to know it. Fine. Second issue is CRA pulls your number and says, we're going to do a GST, HST audit on you. They look at 2 years. And I had this happen, so this is how I learned this. We had taken over the account. We had done 6 months of bookkeeping, 18 months done by a prior person, and CRA always does 2 years. They came in, looked at it. They had no issue with how we were posting things for our 6 months. The things posted for the 18 months before, what they do is they ask you for a printout of the account for the HST, GST account. And every time they see $100 or more, they highlight that and say, go get me that receipt. I want to look at it. Well, when you take your Visa and MasterCard and you just do that little summary and post it, guess what? The average is your HST probably is over $100 every single month. So every single month for 18 months, they pulled that on this client. And we said, oh, okay, no problem. It's in this envelope. There's a summary stapled to the outside. Do you want to pick a couple of receipts to see? And they looked at us like we had 3 heads and said, oh no, we will now have to look at every single receipt in that envelope. So for 18 months, they looked at every single receipt. And this client had like 4-page or more Visa statements. It was horrendous. Those auditors were here forever. They started denying all kinds of things. You do not want to do that. So the other thing I've seen is people will do them in an Excel spreadsheet. It's the same result. You're posting it in one entry. Now, you got to think about it. If you're actually taking time or your bookkeeper's taking time to do an Excel spreadsheet, what are they posting? The date, the name of the vendor, the amount, the sales tax, and what GL account, how much is going to that account. Well, the exact same fields are what you're going to post in QuickBooks. So why bother? Just do it in QuickBooks. Then each entry is there. The HST is a lot lower. Nobody's going to be wanting to look at them if they come in for an audit. So that's my freebie tip for you, audit-wise. Take it or leave it, but I've seen it many times. Also, the next thing is keep proper receipts, not just statements and not just payment receipts. So we'll talk about both. You can't just give a credit card statement and show it as proof to CRA. They actually have it stated on their website. That is not acceptable backup. What they want to see is they want to see the actual receipts. The other thing is, when you go to a restaurant, you have your receipt and your payment receipt. They don't want the payment receipt. They want to see what you bought. Okay, so make sure you have the proper backup for them. Okay, so this is where I said we're going to start talking a little bit about apps again. So they want sometimes for me to put quotes in, and I sometimes say, but I have a quote. So this is my quote. I say that QuickBooks and the app world has revolutionized bookkeeping. So the bookkeeping world's been revolutionized. I tell that to everybody. As you can see in my little picture here, I've got QuickBooks Online in the center, and I have got some of my favorite apps. Some do the same thing, but there's different reasons we use them for the clients. And that's what we call an accounting ecosystem or app stack. So you're going to notice on here, WagePoint, that's a payroll one. And QuickBooks Online now loves WagePoint so much that is what's working in their system for their advanced payroll. So you actually get the WagePoint program. T-Sheets is just timesheets. It can go into QBO, and it can also talk to WagePoint. What I like, I put in there the little things I like. It has GPS capability. So if you have people going all over for you and you're not really sure if they're in the Tim Hortons drive-through or they're actually where they're supposed to be, guess what? You now do with this app. You also can do scheduling, and I like that. So if you have to schedule teams, great for that. Nexonia does timesheet and expense reports. So I love it that it also does the expense reports. I have a client, we put them onto this, and I use this app, and the expense reports are amazing. They've got 20 people handing in every month. Knit is a free payroll, and it also has an HR aspect. I love it. They make their money off of, they hold your money for those few days after you run payroll and before it goes to CRA. And they also work with a benefits company. So they get their money as a commission from group benefits. So if you want and are looking for group benefits, you can get a quick and easy quote through that app. WayPay is an electronic payments service. It does payments out to your vendors, and soon coming to you in February, it'll also let you have your clients pay through their app to you directly so you can get paid faster. Here's one of the backup apps I mentioned earlier that there was 3 I found out. ChronoBooks. So it will back up your books, and guess what? Not manual like QuickBooks Desktop. Every time you go in or somebody goes into your QBO account and notes there's been an edit, it decides, okay, every 5 or 10 minutes after it sees an edit, it's going to save to this backup. So it saves multiple backups and it saves. So you never have to worry once you hook it up of pushing a button and saying, oh, I need to back up. It's time to back up. So I really, really like that. So that's kind of my suite, but there's tons out there. There are inventory apps. POS, like Shopify is an app you might be familiar with for e-commerce. There's lots. So go to the App Store and or Google and say, this is what I'm looking for, and it talks to QBO, see what comes up. So I think, look at that. Oh my gosh, I did that right on. 45 minutes, that leaves us 15 minutes for questions. I don't know how I managed that. All right. I don't know. Let me just see here if I can get to the questions. If there's any questions in there. Oh, here we are. I'm in the wrong area. Let's get in the right area. Well, I'm trying to get in there. Oh, there we are. Oh, somebody's asked, does ChronoBooks back up to Dropbox? Yes, it does, and to Box. Dropbox and Box. So both. Okay, I am having issues at seeing all the questions. Is there any more questions that are coming in? Oh, I do see another question. Hang on. Can you explain again about the 50% meals rule? Okay, I can do that. So let's say you go out for lunch with a prospect and it costs you $50 including tip and taxes. So what happens is, of course, you put it on your credit card or you pay with debit, and you need to record that. So you do record that in your book so that you can balance your bank or balance your credit card. What happens, though, is you just have to remember in the back of your mind, when you look at your profit and loss, that bottom line number, that's not the number CRA is going to calculate income tax on and your year-end accountant calculated on. What they do is they put that number in, and then there's different things that happen that they add back. And so one of them is meals and entertainment. So whatever number you show in your meals and entertainment, they add back 50% to that. So you're paying tax on income tax on 50% of whatever that balance is. It's been around for years, but it's something that just gets done by your accountant. Search for the NIT for payroll. With Canada Revenue Agency and RUs, can you submit them? Wait a minute. I maybe have, oh, wait, no, I have 2 different ones. Search for NIT, yeah, she's just telling us, you have to search KNIT for payroll. You're right, it's NIT payroll, and then you'll find it. You can submit ROEs online without registering. No, you need to go in and register, but they've made it a lot easier. It used to be really, really difficult, and they've now made that a whole lot easier than it used to be. So if you type in ROE Web as your search, you're going to get it, and you can fill it out to register. And the reason why is they don't want paper ones anymore. They're pretty well not accepting paper ones anymore. So they've made it easy for you to do it. Okay, so I've answered the one about the free payroll. It's knit payroll. Knit app works with, okay, QuickBooks Desktop. Excellent question. I didn't go into that on a few of the apps. So knit payroll only works with QBO, but guess what? I have talked with them, and they are now looking at doing it with desktop. WayPay, they only had QBO. I talked to them. You got to understand, we got kind of a big group here. So when I talk to them, they go, really? We should do that? So I kind of sway them a bit. And yeah, I got WayPay to also go desktop, and I'm happy to announce in December, beginning of December, they also could talk to desktop. Which other one? WagePoint only does QBO. Nexonia does both. T-Sheets only does QBO. Oh, and I didn't talk about HubDoc. Shoot, I didn't talk about HubDoc. So HubDoc was at the top of my picture there. HubDoc is the best thing since sliced bread, so we got to talk about them. HubDoc, it is a document gathering place, just like a Dropbox or a Box.com, but it does way, way, way more. It gathers it, but you can also hook up to places you would normally log into, and it will fetch the stuff. So you don't have to put it in there manually. I'll give you an example. You hook it up to your bank, all your bank statements, all of a sudden will download. Whatever your bank allows on their site, like TD, it's 17 different months, it all of a sudden all downloads. It not only brings in your bank statement, your credit card statement, it brings in your e-transfers. So how many times do I see clients' bank statements that say, oh, I e-transferred a payment? And I'm like, but who'd you pay? And they go, oh, I can't remember. But everybody's paid, but I can't remember who that was. Well, that's not so helpful. HubDoc lets us see who you paid. It was ABC company or XYZ company. It also, when you do that transfer, put in the invoice number. So if you pay multiple ones, the bookkeeper can figure it out, or you can figure it out later. It also will bring in check copies. That's the bank side. Now, let's say another site that you log into, your cell phone site or your Hydro site. Anywhere you log in, you set it up once, and every night it goes out and looks for an invoice. So anywhere you have a user ID and a password, you can hook those up. The other thing is you get an email address, and so anybody who emails you an invoice. So my company, Targeted Accounting, if you were to use me, I will email my invoice. So what happens is you give that little email to all the vendors emailing you an invoice. They can still email you and CC this other email. It goes into HubDoc and it captures it. Now let's say you're out and you've got a little receipt, a taxi receipt, a parking receipt or whatever. There's an app, you snap the picture, it goes right into it. Now what happens is it reads it. It will automatically set file folders up and file it for you. So it's not this great big mush of stuff like an email is. It files it all. You can even set up rules. It syncs with QBO. You set up rules, and those rules, you can say, I want to auto post it. So every time you see Staples, automatically post it with the right sales tax and to office supplies. Now, it may not be perfect because, at Staples, you could also buy a computer, which is a fixed asset. But what we do and train our staff to do is get everything automatically posted, and then we review on the profit and loss side. So we'll pull a report, we'll drill down, and then we do a quick review down. And when you see that you spent $1,500 in office and general on one purchase, you're going to go, whoa, that's wrong. And you click on it, you open it up. Guess what? Not only did HubDoc post this transaction for you, it attached the receipt that you put in HubDoc automatically. So you automatically drill down, you open it up, you go, right, some of this was office supplies and some of this was fixed assets, and then you can allocate between the two. So I absolutely, absolutely love it. There's another one called Receipt Bank. It has a better OCR reading capability, but it does not fetch stuff for you. So my saying for my clients, Not to be mean and nasty, but none of them seem to be able to count to 12. When we get statements from them, they're always missing one. For some reason, they're missing one. And then that's a block in time, like you set aside to work on it, but you can't because you don't have everything. So that's why I love HubDoc. It goes and gets it automatically. Let's see if there's some other ones in here. When two realtors have a team meeting meal that isn't claimable, then because it's not directly for a sale. Well, you have to read CRA website on what's their definition of allowable meals. You can have business meetings. There can be other reasons. You could be having a business meeting and bring in food catering. By the way, if you do it for your whole company, that's 100% deductible. Didn't mention that. That's a little anomaly to the rule. 100% deductible, but you've got to note it separately so your year-end accountant doesn't take 50%. So you can have an account called Meals and Entertainment, your regular one, and then one that is just the 100% ones because they were for your whole team. You had training and you brought in breakfast or something. Those are allowed. The other thing I didn't mention, HST, GST on meals, because of that 50% rule, the ITC, the part you paid and you normally get back from the CRA, also you only get 50%, okay? And a lot of people don't really realize that. So you only get 50% of that. The other 50% you should put in its own little GL account. I usually put it as a sub-account to the Meals and Entertainment and say non-deductible M&E, GST, HST. And that's because it's not deductible at all on your tax return. When it's been denied for the GST remittance, it's denied for the income tax, so it needs to be separate. What else have we got in here? Oh, what's the best way to record your HST purchases when you're using the quick method of HST? Good question. Good question. Well, you don't turn on the taxes. Okay, because what happens when you turn on the taxes, it's taking it that you're filing based on actual. So it's dissecting all the sales tax off. You don't do it. You follow what the rules are on the form for quick tax, and you just, that's it. So you don't use the tax filing rule or feature in the QuickBooks software, and you don't actually note your taxes separate. You keep them with your whole expense. So if you spend $113, if you're in Ontario, 100 plus 13 tax, your expense would show 113. You then do your quick method calculation, and that's it. Okay, let me see if there's anything else. Oh, what's that one? Does HubDoc have bookkeeper preferred rate? Answer yes. If you're a bookkeeper, yes, you can have an umbrella type situation set up just like QBOA is for Intuit. Once you get a certain number of clients, they reduce your rate. And I can't remember how many clients. It might have been 10. I have to look, but you get it at $25 Canadian. And again, just like Intuit, they kind of have like the bronze, silver, gold kind of preferred pricing in that based on how many clients you have. Okay, somebody has asked, GST HST is the 90 days to pay. Oh, right, I didn't mention that. Right, so if you're on annual GST HST, you do have 3 months to pay the amount or the net amount remaining. If you were required to pay installments, you pay those. Now you've done your final quarter. Whatever extra, or if you've overpaid, you'll get a refund. But if it's extra, and when's the filing remittance due? It's 90 days after your year end. So if you were a December year end, it would be due March 31st. Where if you're quarterly, it's due the last day of the month after the quarter. So that's a bit different. Oh, good question. We've got one about what is the general rule about keeping original receipts that you've scanned or uploaded to HubDoc, or even if you've scanned and kept somewhere else. The CRA site, it's hard to interpret this area. Yeah, but there is an area, I did find it. I couldn't tell you what I put in to get it, but there was, and it's pretty new. I think it's since a year ago, November, they updated their requirements. And because it was pointed out to them, I think, some of the things we get are on thermal paper. For instance, if you go to the gas station, that printout is thermal paper. And if it gets left in any kind of light, it fades, whether it's sunlight or in an office. It fades to the point where you can't even read it. So they've now said, okay, if you have an acceptable copy in electronic format, that's fine. The only caveat is it has to be a format that you'll be able to pull up and read and show them if they come for an audit at any time. And you're required to keep your documents for 7 years. So what they're saying, you remember the old days when we had the floppy drives, we had 5 1/4 inch or something, then it went to 3 and something inch, and then we had USBs or thumb drive. The point is, we don't have any computers with floppy disk drives anymore. So if you save it on a floppy disk drive, you got a problem. You have to have it in a place and in a readable format, a PDF or whatever, that is still going to be readable 7 years later. So if all of a sudden Adobe went away or something, we didn't have PDFs available, we couldn't read them anymore, that would be a problem. As long as it's readable, you're going to be fine. Business startup expenses that you have before you're registered, can you claim them? Okay, so that depends on if you are incorporated or not incorporated. And this is going to have to be my last question because we're at an hour. If you're unincorporated, anything to start your business that's related to your business, you're going to be able to count because you're going to do it on your personal income tax return. So even if you hadn't registered, you were just investigating to see if it was worthwhile to start this business. Absolutely. The registration is so you can use a name, right? And that's what that's for. So yes, if though you say you do some research and then you incorporate, okay, now you've got a problem because they can't go in the same tax return. An incorporation is its own entity and has its own tax return, and you are an individual and you will have your own tax return. So any expenses you had on your investigation, those could be claimed on the business form. I think it's 2025 is the number on your personal tax return. Even if you do your own personal taxes, you can look it up, business income, and you can put those expenses there. Okay, you can still claim them. And then you incorporate, so as of the date of your incorporation, everything else you could claim in your incorporation. Thing to note, if you are working and get a T4, that loss, because obviously if you were just investigating, you weren't making money. Even if you did make a little bit of money, you're going to have to claim the income and expenses. If there's a net loss, that will go against your T4 income. So it kind of helps you in that first year. You can reduce your personal taxes. I know there's lots more questions. I got to as many as I could. Thank you, everybody. It was great. There was 70-some people on the call today. I really appreciate it. I hope I gave you some insight into some things. If you need to get a hold of me, look up Targeted Accounting, and we can help you out with perhaps some more answers. Really happy to have you all. Hope you look at the other courses and register for some of the other courses.